Hey guys, it's July 9th. Wow, can you believe it's July 9th already? And this is our weekly briefing. This is the once a week kind of moment we're gonna kind of gather, ask the bigger questions. And today I'm gonna hand over the keys to Joe because Joe, in a way, I'm gonna say this topic came up a little bit because you were expressing frustration back when you were a business owner of man, oh man, the things you wish you knew back then, and you're a little kind of frustrated about that. So you wanna put me on the I don't know the firing squad today and just hit me up with a bunch of questions.
Yeah, that's right. So team, today what we're going to do is what we call a takeover. I get to ask the questions. I promised that I would pull no punches. And we had a weekly briefing a few weeks ago called positioning shit, where Matt and I tried to swear as much as possible, and I just didn't get enough profanity in. So now that I'm in charge today, I'm going to see how many I can get in, and we'll see what we can do from there.
We'll have to put an
But
E in
How is everyone faring?
our tag.
yeah, just like yeah, the little dollar signs and exclamation points covering up literally everything I say.
Right.
Uh, but no, one of the issues we were talking about, and one that really, really plagued me when I owned my business, was figuring out how much to pay myself. And one of the reasons that was a problem is that's not a static number I got to set and forget. It is a number I was constantly reevaluating based on all the things that were changing in the business. And it was a number I felt was constantly up for debate. So one of the things that I wanted to do today, Tim, is just kind of like I want to fire a bunch of questions at you about owner pay, what you think about them, or what you think about it, how to evaluate it, why it matters, and when we should change. And like, let's just have a real conversation about what studio owners need to be paying
Yeah,
themselves.
totally. It is like a mystery. I think a lot of us have struggle with owner pay because we come from freelancing and that's like time based or rate based or whatever. And we think, well, we made 80 grand as a freelancer, so I'll just make 80 grand as a business owner. And you put yourself in as that, and you don't know where else to adjust. You didn't know what to charge the client anyway. So it is kind of a struggle, especially that thinking of paying yourself first can be a struggle for people as well.
Yeah, and that's definitely one of the things I want to talk about. So, the very first question I want to ask you is as a business owner, why, when there's a cash flow problem, when we lose a client, when in the natural course of business, sort of the dollars and cents ebb and flow, is my paycheck the first one on the chopping block?
Wait, do you want to know why you behave that way, or do you want to know what you should have done instead?
Well, why did I feel the pressure to behave that way? So
Yeah,
I'm
right.
telling you, in the 3 years I ran that business, my paycheck, like it looked like this. Not literally every pay period, but it was up and
Yeah,
down and up and down every time we had a win and a loss. And I felt like I was accountable.
yeah, that's really interesting. Okay, well, let's frame maybe why we do that, right? There's probably a protective nature or an embarrassment or a fear or anything else that says if I re let go of one of my employees, ask them to take a pay cut, or anything that looks like public facing, it's an admission of failure. I was supposed to be successful. That means when I made a deal with somebody, it feels like a promise I'm supposed to follow through. So we blame ourselves, therefore we put the burden on ourselves. That's probably, I mean, I'm a business owner. I kind of feel that way sometimes. It's like, oh crap, I better do something about this. And I know that I want to go towards revenue generation, but if the revenue is not there, we probably want to hide it. So we kind of hide it from everybody, and we do that by eating it ourselves, right? The the reality is there's probably the easiest way to think of it is you should be getting two paychecks. Um, One is you should be getting a paycheck for the job you're doing. So if you're a creative director or executive producer, a salesperson, whatever that thing is in your business, and there's a market rate for that, $200,000 a year or $125,000 a year, you should be paying yourself that. That's like that's like overhead for the business for you to do that job. And then the second one is, you're an investor. So the investor does basically get a percentage of the profits. So if you thought about that in two different categories, you might have one category that does go up and down, that investor one. Hey, when there's profits, I can make distribution. When there's not, I can't. Or adjust my expectations in that category. In the first category, it should always be somewhat flatline. And and just for clarity, I know that your tax accountant is telling you you have to pay yourself payroll. I'm not talking about a payroll amount for tax accounting and tax strategy. That's a different conversation. I'm talking about bringing home the either equal to benefits as a business owner. It could be car payments, health insurance payments, life insurance payments, whatever things that the company could pay for and reduce expense and call it an expense, therefore reduce taxes, but comes to you. Talking about that part of it, as well as the opportunity for you to kind of like know you have some security as a business owner to keep on doing the job. Those are the structures we want to have in place. Okay, so that's an easy way to start off. But I can tell you, most people I work with, we don't go up and down. We are using the factors method, so we're using percentages of revenue, and we know what that person, the business owner, needs for their lifestyle, and that's their take home no matter what. And that is looking at the profit lines and the revenue and the payroll lines and whatever, and saying that is one of the first payments we're going to make. What's nice about that, and if we keep that structure in place, this might be too long of an answer for you, Joe, but if we keep that structure in place, then it requires you to address the real issues of the business. Wait, if I keep paying myself this way, I can't afford to have all these people on staff. And I would say, right, that's the actual problem you should be solving. You should be looking forward at what the revenue is and the expenses or your team size and make sure they're always right sized. So that by keeping that one static, it allows you to have that visibility and that critical thinking of when it's time to address the real issues.
That's very interesting because when I think about my role as an owner, I always felt it was my responsibility to protect my people, to keep my staff employed. But what I'm hearing you say is it's my responsibility to keep myself employed, to keep myself motivated to actually do the job, whether that's my investor compensation or my salary compensation. And the rest of it has to fall from that. Because if I don't want to run the business, it doesn't really matter if 10 people are getting checks.
Yeah, let's consider business for critical thinking as like a third party. That third party is paying you, the owner, to act in order to keep it alive. Hey, Joe, I need you to do certain things so I could stay alive as a business, keep me alive, right? If you're saying, hey, the money I'm getting from you doesn't keep me alive, then like that's not a good exchange. So the business has to provide you with that paycheck so that you can keep it going. And because you keep the business going, then your employees will always have a paycheck. When you kind of flip the priorities and say the priority is employees' paychecks first, and then the business second, you're actually killing, it's like burning the house in order to stay warm. Like you're tearing off the walls to create warmth, like you're just making it impossible to sustain. And there are moments where it feels like that way and it really isn't. And there's moments where it actually is that way and you need to address it. So that those are emotional ups and downs you can feel. But there is a reality of like, no, your job is to keep that business going. That's where all the other benefit, like other people's employment, raises, production costs, that kind of stuff comes from.
That reframe is actually really helpful. And I know I've said this to you before, but if I were thinking in those ways, and if I had had the factors method when I ran my business, I would probably still be running it because I made all the I made all the wrong decisions.
Yeah.
But let's talk about talent for a minute because I feel really strongly that the cost of talent and the rate at which I'm able to pay myself as an owner are often more inextricably intertwined than I would like.
Hmm.
So hear me out. I've started my business. I'm running it. I'm doing most of the work. I'm the creative director and I'm executing most of it. As we grow and we move toward what I might call scale, although not every business scales, I obviously need talent because I'm not capable of doing all the work. You want the best talent possible so that they meet your standard of excellence and allow your business to grow at the same rate it was. All of that kind of goes without saying. But when you have to pay for the quality of talent to meet the quality of expectation that you've created when you were doing the work, the amount that that talent fetches in the open market is really dangerously close to the amount that I'm paying myself as the owner.
Right.
So when we talk about the owner pay gap, I think about it in a few ways. But the first one is, why am I making the same amount, just a little bit more, or God forbid, less than my best or most expensive talent? What do I do about
Yeah. I mean, it's so true, right? I mean, I guess again, like if we think about how we often get into the position of ownership, we've already done a job in the market and we were used to a certain lifestyle. So I might have been making $125,000 as a producer, and therefore when I start a business, I convince my wife I can start a business as long as I bring home 125,000, right? So that's kind of
it?
like, yeah, there you go. That's exactly it. So that becomes like your like household norm or status quo or whatever you want to. The reality is once you start getting in the marketplace, there's a value proposition that's outside of just salary payments you're going to get. Your ability to convert somebody's issues into a solution can be very valuable to your clients. And that proposition, often we drag other people into it. Hey, your stuff is very beautiful. Come along. You'll help make that solution less painful. Or your people's speed, people's accuracy, people's efficiencies are all kind of like brought into that equation so you can satisfy that client's needs. What's funny is that we don't recalculate our own personal household income, even though the value of the machine you've created is becoming more and more valuable to clients, and we're not recognizing it. We don't even see ourselves as part of the equation. We see this artist making a demand to get paid some extreme amount of money. And then you think in your head, I'm not demanding that of myself. I'm not going to put that pressure on myself. And that gap gets basically narrow or sometimes upside down where some of your employees might be making more money as you as the business owner. And that should never be true. So maybe now we're looking at three different ways of paying yourself. You're going to pay yourself for the job you're doing. And if the market says, hey, an executive producer makes $125,000 a year and a creative director makes 150, and you as the owner are an EP and you're hiring your creative director, okay, you can see where that creative director makes more money with you in the marketplace. But then you need a second paycheck, which is the paycheck of being the owner. And you're like, if I'm going to show up every day and take on all this burden and take on all this stress and fight all this stuff, like, heck, you owe me another 100 grand. So if I'm going to do both those jobs, I'm making 225 to make creative directors 150. That's the right kind of way of thinking of it. And then the third payment, which is the investor that says, and when there's profit at the end of the year, I'll distribute some of that profit to me or repurpose that profit and have it benefit my personal lifestyle. That's maybe a third way of seeing yourself get paid. So that might be a way of helping people not fall into and create that big gap.
When is the right time for me to recalculate that gap? And how do I do it so I'm not living in a world where I think I'm paying myself enough or I'm worried I'm not paying myself enough and then I'm just living in an anxiety spot?
There's like a old saying that the best time to plant an oak tree was 100 years ago, and the next best time is today. So if you haven't already done it, you should start today and start doing it. It might be a little abrupt to start restructuring things and realizing, oh, wait a second, I'm halfway through a project. I can't necessarily right size my business in the middle of this project or reallocate budget dollars from that project to go into other areas or other priorities. But you can start planning for it. So we've been talking about the factors method. I think most people on this call might know what that is, but in a way, one of the things we do when we build out our first step of the factors method, which is called a factors report, we basically look at the company revenue and then all the expenses necessary to run the business. And we look at those expenses as a percentage of that total revenue. And in right sizing, you're basically making sure that you've prioritized the money in the right areas, meaning you've added higher percentage spending in the right areas. and shrinking things that aren't necessary into smaller areas. That comes naturally. Um, what's nice when you do a percentage is when some things increase in revenue, right? When revenue increases, the dollars expand in that pocket because 10% of a million or 10% of 10 million is still only 10%, but the total dollars are there. And that allocation is nice and easy to have a formula to kind of put that in place and then keep things on track from that point on. If I were to be asking myself a pay gap question today, I would jump right into a factors report and start looking at that percentage and asking myself a question: what percentage of the revenue am I taking home? And is that an appropriate amount? And then what influence do I have over the other expenses to make sure I'm getting what I need to sustain myself, therefore sustain the business?
That's interesting. So looking at the total pie to make sure that my compensation A feels correct as a percentage, but also is enough that I'm not mad about it. That's what
Yeah.
I'm getting.
Yeah. I mean, a lot of people are familiar with Mike Malkowitz's book. I'm looking for it because I had it on my desk a little while ago. Then I spilled water, so I don't know where it is on my floor right now. But
My book is all wet right now.
it's all wet anyways. But the book is called Profit First, and I think that book is often an epiphany to a business owner because the recognition that you should capture profit first as an expense feels somewhat unnatural because we've convinced ourselves profit is what's left over if I've done a good job. Instead of saying profit is the number one necessity of running a business is profit. That's where the company gets all of its viability and growth. So I have to find that profit first and then other expenses. So when you're looking at things in percentages on the factors method, you can put that profit first. And that profit is one of the things you as a business owner are looking at as a tool to take care of your own lifestyle as well as grow your investment, aka your business.
That's really interesting. That reframe probably would throw so many people I know for a loop. It would throw the 5 years ago version of me for an absolute loop. I thought profit just came if I worked harder.
It throws everyone for a loop. I kid you not. Anytime someone engages me and I show this to them, the first two conversations is a little bit of a, do you trust me? And so it's gotten easier over 20 years because now it's like, well, you've been doing it for 20 years. You're probably right. But early on, it was this, no way, Tim, that can't be true. Quality matters. That's my favorite. We have to still produce the same quality. It still has to look good. And I keep thinking, well, why would you cut quality and looks? Like, aren't you a creative person? Like, the creative direction you're giving will still be of high quality and look good. You just won't spend as much time on it, or you would use different resources to get that quality out of it. And I think that's where a lot of people don't realize they have that ability to convert the subjective nature of the project to fit that structure and to put the pressure in the subjective area, still deliver on time, on budget, and it looks gorgeous. Of course, that's what our job is. So we can make that project size any size we want to, and leaving the priorities where they need to be.
Okay, so when we talk about the owner pay gap, I'm thinking about it in a few different ways. The first, of course, is the gap between what I need to survive and what I can make. The second way I've sort of quantified that is the gap between what I make and what my highest paid employee makes. The third, and honestly, the most tempting, especially in kind of the early stages of my business, was the gap between what I am making as an owner and what I probably command on the free market. When I left a big agency to run a small agency, people who are less good than me at the work were making a lot more. And so the thing I would tell myself is like, well, it's too late now. You're an outdoor cat. Can't stop being outside. You take vacation whenever you want. Like you're already sort of the boss of everyone. There's no way you can have a boss again. But then the thought creeps into your head the more and more you think about pay. It's like, am I better off as an employee? How do you know? And how do you know when that gap is real and when it's imagined?
Yeah, good question. I mean, some of this is a personal journey, right? So who you are, what you're about, what you're trying to accomplish. So, I have this structure called the four stages of a creative career, and it's defined by fame, fortune, freedom, and influence, right? So we're really in our personal journey, really kind of balancing the need for fame, the need for money, fortune, the need for independence, freedom, and then influence, like our ability to open doors, close doors, keep the machine going. So that those four areas are also part of the influence of like where you are better fit, working for somebody else or working for yourself. One of the things I've had to do over the last 20 years is to help people transition very easily into letting go of their business and finding a better job. Um, some of it's because like, life only goes one direction. It's very analog. And if you don't capture it, some of it soon enough, you don't have the benefit of time with, revenue or investments or influence or whatever. You don't have the benefit of time to get the legacy you need to or the earnout that you need to at the back end. And when that time comes, you might be better off putting yourself in someone else's hands who does that better than you do. So there is a strength to other people that you could be in better shape being their employee. I do think you're right, though, that some of us have like almost like a genetic part of us, right? This entrepreneurial gene that says, yeah, but freedom is really, really strong. You're called yourself an outdoor cat. Like once I'm an outdoor cat, you can't really bring me in. I'll just pee on all the walls, right? Like there's a reality of like, it's not really going to work. So if that's true about you, then you're going to have to be a real business owner and step up and do real business owner things like get a return on investment of your time and your and effort you're putting into this business and paying yourself first. So in a way, like I think some of the maturity that we're often looking for or know that we're, striving for is really just reconciling, oh yeah, I'm doing this for real. I guess it's time I start acting and doing things the right way. Um, and that's where you start investing in operating systems and other people and the routines and the processes so you can depend on them, and then you can go out and be that independent person and start earning the money you deserve. But you really have to know what that priority is and make it time. But yeah, there are like that personal journey aside, I think there is very clear math. Sometimes you say like, to be honest, you can go make 100 grand more a year working for somebody else. Why are you running around being stressed about paying corporate taxes and making what a junior animator makes? That doesn't make any sense. If you're that good, can you just go enjoy your creative career and still have fame, fortune, freedom, and influence? You just have to understand how to navigate that differently under, someone else's business instead of your own business.
Yeah, I think it's really well put. And one of the things, one of the things about that outdoor cat energy, right? If you're committed to this idea that this is my life and I'm going to do it, one of the things we talk about in my group a lot is that means you have to do the hard thing. The reason my groups get together and talk about accountability for the little things, right? Making sure you're reaching out to people, making sure you're checking in with your client relationships and your people, and the little things you think you can skip when you want to go produce award-winning work or whatever is like that is actually the difference between the studios that sort of function, sustain, and grow, and the ones that are constantly stressed about am I an employee or am I a business owner? It's because those folks are not skipping the hard thing, and so that really resonates for me as I'm helping folks learn to make sure that on a daily basis, a part of your day is doing the thing you don't want to do.
I mean, if you stick with the metaphor, Joe, the outdoor cats are the ones that get into cat fights. Like you have to be ready to go fight, right? Like that's what it is to be that. So when you choose independence, you actually have to go fight for that same independence to keep it going. Um, and I'll say like there are even appropriate seasons in life to recognize it was really great when I'm young, but now my family has gone through a transition and I need some security. I might need health benefits or need to spend more time focusing on a household issue, a family issue, a marriage issue. I'd say like if it came down to being divorced or being an entrepreneur, please don't get divorced. Please don't go work for somebody else and keep your family intact. It's a way better investment no matter what you're thinking ever than thinking I'll just ditch all of them and make myself a successful business person. Mm, yeah, but sad and lonely, like I don't know if that's necessary. So to me, like I think there are those personal priorities should step in and logic to step in. And if your family needs you, your wife needs you, whatever it is, your parents need you, whatever that is, and you need to take a season, go work for somebody else, there's no shame in it. Take off, go do it. Be smart.
Yeah, I think that's really, really well said. Also, if we had known we were going to get into a feral cat metaphor, we were talking about like we were talking about the graphic and how it didn't have our pictures, but if we had put a cat fight on the graphic for this week, think about the traffic we would have
Oh
generated.
man. Yeah, yeah. Cats. Yeah, no, can always do it. We can play a cat video this entire time when we post this on YouTube.
That's perfect, honestly. We know how to get traffic. We know what we're doing.
Right.
But the final way for me that I was thinking about the owner pay gap. So let's assume sort of across the stages of maturity of your business. And I definitely got to this place in my business. We grew our top line revenue very fast, very large, very quickly. And I was asking myself, am I paying myself enough? Right. Once we kind of got through the season of the up and down, the question I started asking myself is relative to the size that I have created for this business, am I paying myself enough? So the gap between what I'm being paid now and what everyone else whose business is also this size is
Yeah.
paying themselves. So without trying to look and count somebody else's money, I'm saying if I've got a $10 million business, I don't actually know how much owners of other $10 million businesses are paying themselves. Am I being greedy? Am I being whatever the opposite of greedy is? Right? Like, how do I know what the right amount to pay myself is? And how do I reward myself for the delta between where we were and where we are now in a way that's commensurate with the effort it took to get there?
Yeah. Okay. That one's pretty interesting. I'll use like factors thinking to kind of put some structure to it. So if anyone's kind of like wants to figure out, I mean, are they paying themselves enough or not? Then great. We'll like maybe there's an easy way of thinking of it. I'll say it. I'll say it like this. When I do mergers and acquisitions with businesses, one of the things that this buyer is looking for is how much margin, how much money is available when they take over the business that they can do something with it, keep it themselves, cash it in. And when they look at that margin, they add things up like what the owner pays themselves, as well as what the net profit is, and the person's benefits. So we call those add backs. So a person might make $200,000 a year. A business owner might make $200,000 a year in payroll, but if you add back all the benefits they're getting, they might be getting 300,000 or 350 a year, something like that in total compensation. If you include like someone's personal assistant or travel expenses you run through the business or that kind of stuff. So you can get into the nitty gritty. A person acquiring a business wants that total margin to be at 20% or more. So if you're looking at profit in your add up of your revenue and you're $1 million business, that 20% is $200,000. So to some degree, if you're running $1 million business, you should be thinking 200 grand of that million is that $1 million is mine. Now I might spend it in certain ways, and I might even choose to not take it out and put it in my personal bank account, but reinvest it back in the business so that my $1 million becomes $2 million in revenue. And then when I take out my 20%, I'm making 400 grand instead of 200 grand. But not very many of us are that great at that return on investment part of it. We often spend the money trying to keep up with the Joneses. Other people have this, animator. I better get one of those like everybody else, because it looks like that's what we're supposed to be doing. And we don't really know what that gap is. So our goal is like 20%. Most companies I work with to start, they're running 8 to 12%. So there's a 5 to 15% margin that we might be trying to look for. And that's why we do the factors method to find out what the decisions are that business owner is making and what should be flowing to that margin that we can work with in that 20% category. The other thing you can look at, we'll call it like gross profit. That's the term that's often used like on your P&L sheet. And that's simply the revenue minus the direct expenses. So the costs related to doing the projects. Easy thing to think of is like if you had no projects in house, everyone and everything in that category would be really bored. So if they're going to be bored because there's no projects in house, there are direct cost. So if you take the total revenue minus that direct cost, you end up with this first profit line that's called gross profit. That gross profit should also be at 60%. That's my goal. A lot of people I start with, you can imagine it's at 45, 40%, maybe 50%, but we're trying to find 60% in that thing. So that is like the accordion effect of how you spend the money on projects, which you have a lot of control over. You have a lot of control. It's very, very dynamic how you spend those project expenses. So those two categories, if you're looking at that and you use, call it extreme, but 20% and 60%, if you're not hitting those numbers, that's what you're aiming for. That's what you should be paying yourself. If it's anything below that, I say keep up the fight. Go out there, figure out a smarter way of doing it, finding some more efficiency, or for God's sake, ask for more money and do the same amount of work. That's another way of correcting it. You're probably just not charging enough if you're not hitting those margins. And often, if we charge more, we also feel like we have to spend more, and you don't. You can charge more, spend the same, get the same amount of work done. So that's another way of improving those percentages.
So if I heard you, 20% of all of the money that flows into the business needs to flow back to the owner, whether that's in salary compensation or whatever other sort of expenses I'm accountable for.
Yeah.
What happens if there are two owners?
Yeah, right. Right. I was going to say your struggle was you had two owners, three owners. You can have a lot of issues there. Or to be honest, like what if you're only making $300,000 a year? Right. That'd only give me 60 grand at 20%. I actually need to make 120,000. So that's where that second paycheck and third paycheck come in. You're going to be doing multiple hats. You pay yourself doing those jobs, and you don't, double book. So two business owners, what you would do is move. Most likely, you have more than one business owner. It's easy to recognize that part of the work you're doing is in that direct category. So that first item, that gross profit, you know, one of the other business owners better be a producer or a creative person. If not, then you have too many owners that don't do anything productive. But usually it's the person comes with production experience or creative experience, and they're actually part of that first expense item, or a portion of their pay is coming out of those direct costs. Maybe both owners can take a portion of their pay from that. So in that case, that's an easy way to kind of negotiate between partners is say, I'm a producer, you're a creative director. Usually creative directors make 150, usually producers make 125. We don't have to make the same money. You should get what you would get in the market. I should get what I get in the market. Let's do that first. And now let's talk about the profit, right? Because what's left over at the bottom is this 20% profit margin. And I want to be able to split that up. Maybe we split that up 50-50. Or maybe kind of what those splits are between you guys. Or you can say, let's only take 10% of that, or half of that 20%, and we'll take it home or put it into retirement accounts for ourselves or whatever we want to, buy life insurance policies, whatever those kind of taxable ways of getting that money out, or taxable savings ways of getting that money out. And then 10% we've decided to reinvest back into the business, and we're buying a building, or we're taking on that equipment, or hiring that person that knows AI and it's going to expand our reach somewhere else. And you're agreeing that's an appropriate place to spend that money, so you get future growth out of it.
Don't hire the person who knows AI right now. Just like for whoever's listening. I know there's only a few.
There's
They
usually
don't know that
somebody
much
in
more.
everyone's office that knows AI, but there are some really good ones. If you wanted to get in that business, that might be worth it.
They don't know that much more than you do right now. That's all I'm saying. But no, that's really, really helpful. I think ways of framing that gap and figuring out if you're experiencing any version of anxiety about your pay relative to the success of your business, framing where the gap is that's causing you to feel that anxiety, I think will help you to create or to identify the solution you need to sort of at least paint a picture of how you solve it.
Yeah.
It's not like you said earlier, Tim, it's like you can snap your fingers mid-project and start paying yourself more. But the idea that there is a framework and it comes down to the percentages of money going in and how they're distributed, I think can assuage a lot of the confusion, a lot of the anxiety. And honestly, when I think about like reflecting on my past experience, some of the guilt of bringing on people and promising to pay them and not knowing where that pay is going to come from. It can assuage all of that with pretty simple math about how a business needs to operate when profit is the primary target and owner pay is among that profit. I think it sets you up to have an easier time analyzing your pay and not making it so personal.
Yeah, that's well said. Let me throw one more scenario out there because I can see Ollie's on this call. So here's another. I'm not saying you're doing this, Ollie. You just reminded me because I saw your pretty face. One of the other issues I see with business owners when there's a husband and wife in the business is that they only take home enough salary as if only one of them is working instead of both of them is working, both of them working. If you ran a exercise and said, what would we both make in the marketplace? And our household salary would be 300 grand. And we're only saying, well, our business can only afford 125 right now. Then one of you should get a job somewhere else. You know what I mean? Like someone else should go be making 125 somewhere else. And if this is the only business we can afford is this one paycheck, but both people should be, even if it's the same household, both people should be making what their market rate needs to be in order to do that job. It also then allows for the replacement cost of someone. Sometimes over time, the husband and wife need to take seasons of life away. In that case, you go, no problem. We actually have, that revenue or that expense already categorized as a person in that role. We can hire someone else to do that role, and the other person can take a leave. But it's so frustrating when it's like working with a couple, and then you're realizing like, wow, not only you have two people working for this business, and combined you're making less money than your most expensive talent. That doesn't make any sense at all. That doesn't make any sense at all. So we have to be looking at business and business principles, what you're charging, the rates you're charging, the value proposition you have with your clients. So you're asking for enough money, and then how you're spending it and not overspending on behalf of your client and not taking home what you deserve. Those things have to be put, first things first and make sure that structure's in place to capture that.
Yeah, that's a great call out, Tim. And I that context is useful as well. Sometimes there's that feeling that we need to treat this business like it's for lack of a better term, our child, right? We have built this and we're loving it and we're caring for it and we're going to bring it into the world responsibly. And it's like, no, it needs to bring you into the world, right? It needs to bring you into financial maturity and not the other way around. And it's very easy with the amount of passion we put into creative businesses to get that turned around.
Yeah. And I think there's a lot more just like how you feel like you're supposed to support your spouse and all these other kind of principles that aren't really good for business. It's probably not even good for your marriage, but you've built in kind of these perpetual stories that don't need to be there. So I say take a look at it in a healthy way, restructure in a proper way, and then do what's best for your family, your marriage as part of the equations here. Business ownership is great. It's not everything. So if people need to take seasons off, close their business, separate, the responsibilities between husband and wife with different priorities, all that's very, very appropriate.
Can I just jump in really quickly?
Yeah.
I found a stray cat actually right behind me. Um,
I've seen
but
him.
yeah, I know he just like comes into the office and just like goes around in circles. Um, but yeah, just the mindset kind of thing as well. Because like for us, I was a freelancer for so many years. I know becoming a business owner is a big shift there, of course. But trusting yourself as well. I think like when you actually do it, and you have to do it with your all, because if you don't go into it thinking you can't, you have to believe in yourself. Because if you just go in and you're like, okay, I'm going to try this out, and it's not going to work. You have to be like, go into it with everything you can, because like you said, me and Kate run the company together. I know there's stray cats going on. But yeah, it's just like you need to really commit to it, because if you don't, I think that's when a lot of people like just cave.
Yeah. It's I think some of it is like lack of knowledge. We don't really know what it means to lean into run our business. And that's why we read books and reach out to people and listen to these kind of calls or whatever, right? So knowledge is one of the tools, but you can acquire knowledge. I think the other thing that holds us back is um, the feeling we deserve it. And I think that's the one where you have to just know, like, you actually do deserve this. Like, this is your priority. This is your life work. This is the only place you're ever going to get that money. Please don't give that up for anybody else's priorities. Don't give it to your clients. Don't overgive it to your employees. Don't spend in order to keep up the facade for someone else's, presentation so you look cooler at the conferences you go to. Like none of that's a better reason than taking care of yourself, your own health, and your own priorities, because you're going to live with the consequences of running that business after all those years. Why have those consequences? Might as well have the benefits instead. So absolutely, like kind of like step up and kind of do the work is a necessity. Also, don't lie to yourself and say, if I was working for somebody else, I wouldn't have to do this work. Like it's not true. Like well, maybe that would be true about you, but then you probably wouldn't be a very good employee. You should be thinking, and you carry stress, you carry burden, you carry worries, no matter if you're an employee or a business owner. So you're just deciding to let the priorities be your own instead of someone else's as you follow them. That's wonderful. I think that's the best part of entrepreneurship, is to be able to establish those lifestyle priorities, personal priorities, professional priorities, and achieve them. But you have to step up every day. No one's going to hand it to you. No one's going to make it easy for you. Like that's kind of like what the gig is. So go do what's necessary and enjoy it while you're doing it.
Very well said.
Thanks. I mean, I'll say I live this myself. It's not like I only just talk Matt's swearing in chat. You haven't sworn enough, Joe.
Oh,
So
I
Matt's now
forgot.
swearing
Shit,
in this this thing.
I did not use a
Can-
single profanity today.
Not even one word. I clean you up so well, and I can show
An absolute waste of my opportunity to be asking the questions. I'm so disappointed in myself.
I really
Thanks,
want to
Ollie.
swear. I really want to swear. Can I teach you an Irish one? Say Pug Mahone. Do you know how to say that?
Wait, no,
Pug Mahone.
say it again, Ollie.
Pug Mahone.
Yeah, Pug Mahone.
Oh, Mahone.
Yeah.
Yeah. Say
Yeah,
that,
all
say
right,
that
tell me
to
what it
them.
means.
Yeah, don't say that to someone in Starbucks. It'll be fine. You know, you can say it here, no one will
It means to
understand
kiss
it.
my ass is what it means.
Yeah.
Oh, amazing. All right.
Yeah.
Well, yeah, that's going in the repertoire. I got a
Yeah.
call after that. We'll try it out. We'll
It's a
see if
good
they
Irish
can.
toast every once in a while in the
That's our
right place.
tagline. That's Rocksbox tagline. It's like Rocksbox Pug Mahone. Everyone's like, oh, it's so amazing. You know, it's like that's the most inspiring quote we ever had. So yeah, we'll get the t-shirts. Yeah.
Yeah.
And it means kiss my ass. Outstanding.
The
God.
best.
Yeah.
Let me get one of those t-shirts.
Yes.
Yeah, you get one. You
It's
get made.
Gaelic.
Post
We're teaching you some Gaelic here today. That's good for you.
There you go.
I love it. That makes me really happy, actually. Thanks for
Thanks.
bailing me out on my just disappointing failure to use profanity. Appreciate you picking up the
No,
slack.
that's it. If you ever, that's my actually real skill. I don't animate at all. I just come up with, curse words.
Cuss words. Different language.
Interesting ways to get inappropriate language into professional conversations. I put that on your LinkedIn bio.
Can't wait. Tagline change.
Thanks, Ollie. All right, Joe. How did I do? Did I win? Did I keep up with what was needed?
I think you did the thing. You provided answers to the questions we needed, and the reason I knew this was going to work is not just because I knew that you knew the answers, but because I knew that you had a method. And so I've said this to you before, but I want to repeat for the general listening public. The factors method. I inherited the factors method as a thing we get to talk about at RevThink, but the factors method solves the problems in a way that is clear, impersonal, and empowering, in a way that, I will say it for the 40th time today and the millionth time ever, if I had that tool at my disposal when I was running my business, I would probably still be running it and I would be way, way, way wealthier. It makes the hard decisions easier. And I'm such a strong proponent of it that that's not even my area of expertise. It's not my sort of topic when we come in to talk about RevThink stuff, but it was my idea to have this conversation because I want everybody to talk about the factors method. And if you're curious, because I want you to join Jason's confab group this quarter, where he's going to walk everybody through the basics of that and just gain an understanding of the ways in which this crazy intuitive system can solve the problems that kept me up kind of night after night after night while I was trying to build a business. I just believe in it really strongly.
Yeah. Yeah, thanks, Joe. I mean, bringing you on was kind of funny because you're kind of like, I'll just swear on your behalf. You're like, what the fuck
That's
is this factors method thing anyways, right? That's how you would say it. Not, I wouldn't say
that's
it.
exactly how I would say it. And I was like, hey, I've seen methods before. Like I had a fractional CFO. Like you don't have to show me your spreadsheets. I'm good on that. And you were like, no, no, no. Let me walk you through this.
Yeah,
It
yeah.
was what?
And then you really started swearing, but you kind of just realized like, oh, wait, there's a decision-making infrastructure of where money should go and how you can deal with money instead of just leaving it up to guessing or feelings. And that's that a lot of reporting structures and budget structures don't really prioritize the decision-making power of those dollars. It simply just gives you a rundown of expense items, and you're supposed to somehow analyze that and know how to make decisions. So we've just rebuilt those decision points into the structures.
Yeah, I think that's extremely well said. Decision making infrastructure. My experience with other financial experts in the past was here's all the information. I am capable of understanding that information despite that not being my area of expertise. And then it was basically like, cool, you go make a decision with it. Hope you make the right one. I'll see
That's
you
exactly
later.
right.
Here's a bill for $8,000 or whatever. Right? It's like, wait, no, no, no. Like the whole thing I need is not present here. And
That's right.
so to that end, I think the factors method helps push me in a direction that is again logical and personal and truly empowering in a way that I don't say about everything.
Yeah, right. And just one step above, here's the report, good luck. It's actually, here's the report and what you should do about it. Yeah. Well, thanks for taking over today. This was a good conversation. Those are questions
Yes.
had not really ever. I mean, I think I've answered those questions before, but I would not have walked into this conversation with it. So appreciate you putting those together.
Yeah, absolutely. And it's funny you said that because those are the questions that I was just spiraling on for years. So it was nice to relive them out of context and to have just kind of like sensible, measured answers to them. Felt good.
Yeah, that feels really good. All right, thanks for doing this, and Ollie, thanks for jumping in here, being part
Yeah,
of
I
the
appreciate it.
conversation. Poke my
No worries,
home,
guys. Have a nice
you
day. Poke my
guys over
home.
there. And yeah.
Have a nice day. See you guys.
All right, later,
All
guys.
right.
Thanks, Joe. Thanks,
Appreciate you
Matt.
guys.
I'll
Have a
talk to
good
you guys
week.
later.
Yeah.
Okay,
Good
bye.
week.